Hey traders, welcome back to YashFX, where we break down Forex trades step by step to help you level up your trading skills. If you're new here, make sure to hit that subscribe button for weekly trade breakdowns, market insights, and trading tips to help you on your journey. In today's video, I'll be breaking down a trade I took on Canadian dollar to Japanese yen using my trendline and support resistance strategy on the 5-minute time frame. This trade was a beautiful textbook example of how confluence, proper risk management, and patience can lead to a solid winning trade. We'll cover everything from my market analysis, entry criteria, stop-loss placement, trade execution, and, of course, the lessons I learned from it. So grab a notepad and pay close attention because there are valuable gems throughout this entire video. Let's start by looking at the overall market structure on Canadian dollar to Japanese yen. Understanding market structure is absolutely key when trading because it helps you determine the current trend and anticipate future price movements. On this day, Canadian dollar to Japanese yen was in a clear downtrend. You can see how the price was forming a series of lower highs and lower lows, which is a classic indication that sellers are in control. I also drew this descending trend line, which the price was respecting beautifully. Each time the price touched the trend line, it rejected and moved lower. That was my first clue that the bearish trend was still intact. Next, I identified this key horizontal level, which was a previous support that had turned into resistance. This zone was critical because it had been tested multiple times, making it a strong area of interest for both buyers and sellers. These two factors, the descending trend line and the strong resistance zone, gave me the confidence to look for a short setup, but I didn't just jump in randomly. I waited for confirmation. Now, let's break down the exact setup that caught my attention. After the price retraced back to the resistance zone, I waited patiently for a clear rejection signal. And boom, right here, we got this strong bearish candlestick that closed below the resistance zone. This was a textbook rejection and a clear indication that sellers were stepping back in. At this point, I decided to enter a short trade, but before I pressed that sell button, I made sure to follow my risk management rules. I placed my stop loss just above the resistance level to give the trade some breathing room. Why above the resistance level? Because if the price broke above that level, it would invalidate my setup, and I'd want to cut my losses quickly. For my take profit target, I aimed for this previous market structure low down here. This gave me a risk-reward ratio of around 1:2, which is perfectly in line with my trading plan. Remember, never take a trade without calculating your risk-to-reward ratio. It's one of the golden rules of trading. Alright, so I entered the trade and was now fully committed. But the work doesn't stop there. Trade management is just as important as finding a good setup. Initially, the price moved sideways for a bit, testing my patience. But I stuck to my plan and didn't panic. Then we saw a strong bearish push, and the trade started moving in my favor. As the price approached the halfway point to my take-profit target, I moved my stop-loss to break even. This is a simple but powerful risk management technique that protects your capital while still giving the trade room to play out. One thing I always emphasize is sticking to your trading plan. Even if this trade had hit my stop loss, I would have been fine with it because I followed my rules. Trading is all about consistency and discipline over time. So, what are the key lessons from this trade? Lesson number 1. Always trade with confluence. In this trade, I had multiple factors lining up: the descending trend line, the resistance zone, and the bearish candlestick pattern. When you have several factors pointing in the same direction, your trade becomes much higher probability. Lesson number 2. Be patient and wait for confirmation. I didn't just sell as soon as the price hit the resistance zone. I waited for that strong bearish candle to close below the level, which gave me the confidence to enter. Lesson number 3. Risk management is everything. I only risk 1% per trade, and always aim for at least a 1-to-5 or 1-to-2 risk-reward ratio. This trade was a perfect example of how following that rule can lead to consistent profits. Lesson number 4. Manage your trades wisely. Moving my stop-loss to break even was a smart decision that protected my capital while still allowing me to capture the full move. Eventually, the price hit my full take-profit target, securing a 2% win on this trade. That's double the 1% I was risking, which is exactly what we aim for as disciplined traders. Finally, stick to your plan. No matter what, there will be winning trades and losing trades, but as long as you follow your plan, you'll come out ahead in the long run. That's it for this trade breakdown, guys. I hope you found this video valuable and learned something new. If you did, please give it a thumbs up and consider subscribing to YashFX for more in-depth trading content. Let me know in the comments what pair you want me to cover next, or if you have any questions about today's trade. I read all your comments and love engaging with you guys. Thanks for watching, and remember, keep grinding, keep learning, and never stop improving. See you in the next video. Happy trading!